Welcome to the Free from Wall Street podcast, where we share how we have done over $200 million in real estate deals to create, preserve, and pass on generational wealth without the roller coaster ride of the stock market. If you're ready to start investing with purpose, visit freefromwallstreet.com. But for now, let's dive into this episode. Welcome back, Free from Wall Street. Steve Libman here. I am your host. Today, we're talking about the ultimate guide to real estate syndication investing. So I've been asked a bunch of times, can you just put together a podcast that lays it all out for me? So an introduction to syndication deals, how they work. So we are aware that a lot of people get their first taste of real estate investing in the residential market. Maybe that's just through your own primary residence and you watch it grow in value over time. Maybe it's from flips. Maybe it's from wholesaling. Maybe it was from owning a single family rental or a quad or a duplex or something like that. Right? Most people don't just jump into syndication. I mean, in fact, we know a few people that have been flipping, building houses, wholesaling for over a decade that didn't know anything about real estate syndication until we started having some conversations with them. It's pretty common. Until somewhat recently, the SEC regulations did not allow people to hear about these deals, that we couldn't publicly advertise them. And so to do them, you had to know somebody that was doing the deal. It couldn't be publicly advertised, so you needed to be in kind of the inner circle. Luckily, now the SEC has some exemptions, so certain opportunities are allowed to be publicly advertised, and it opens the gates up for more people to learn how to invest this way. So maybe you're new to this and you're looking to find out a couple of things. One, like, what is real estate syndication? How does it work? Should I invest? Why would I invest? And what's an example of a real estate syndication look like? So we're going to be doing this in a two-part episode. So this is part one. What is that, a real estate syndication? So let's start with the basic. The term syndication simply means pooling resources. A real estate syndication is when a group of people pool their funds and expertise together to invest in a real estate asset together. Instead of buying a bunch of small properties individually, the group just comes together, they buy a large asset together, right? When you guys heard us talk about closing that $42 million project, that's how we do it, right? We don't have $42 million sitting around. We get bank leverage to 70 to 80% of the value, and then we bring in our investors to come along for the ride with us. So let's just pretend that you got $100,000 for investing. Beyond your savings, beyond your retirement, or even with your retirement funds, you can self-direct those. That's a podcast for another time. But you can invest it into an individual rental property. That also means you need to probably hire an agent or find the property yourself, negotiate the contract, do the inspections, run the numbers, get the loan, plus the tenant, find the tenant, and then screen the tenant, and then manage the property, right? It's a lot to do. It's not what I would call hands-off. But it's likely that you don't have the time or the energy. Maybe you do. We have found over time that those single-family rentals, they have, if one air conditioner goes or something like that happens, it eats up your entire year's profit margin. So anyway, you have to manage all of that, right? If you don't have the time or the energy to deal with it, then most people just pass on real estate investing. They think it's too much work, think it's too hard, and then they move on to invest somewhere else, like the stock market. Well, obviously, from the name of this podcast, you know that that's not where our first dollar goes, right? So real estate syndications are the alternative that allow you to put the money into real estate without having to do the work, find the property, manage the property. Instead, you could take that $100,000, put it into a real estate syndication, and be a passive investor, right? And maybe we have, 20, 30, 40 people that are all putting in 100, 200, 300, $1 million, whatever it is. And then by the time you pool those resources, the group will have enough money to go buy that rental property, and a large apartment complex. We do student housing, we do senior housing, we do self-storage facilities. And then a sponsor, the guy or group or ladies that are finding the deal, managing the deal day to day, doing basically all the active work, they get a share of the profits, and in turn you, as a passive investor, get a share of the profits. And when done right, real estate syndications are truly a win-win for everyone involved. I'll tell you, when we used to do wholesales and residential real estate in that sense, people would call us because they had to sell their house for cash fast. Let me tell you, that does not speak to a situation that is good for that family, right? They usually call us because they're in trouble of some sort, and we can help, or we were able to help, but it was typically because of a bad situation. What I love about syndications is that it creates a win-win-win, right? It's a win all around for us, for the investors, for the property managers, for the tenants, if and when done properly. All right, so now you're interested in taking a behind-the-scenes detail look at a syndication and see how it really shakes out, right? So first off, there's two main groups of people who come together to form a syndication: the general partner and the limited partner. So the prior section mentioned a team that would take care of the day-to-day management, the active piece of it, so you don't have to in exchange for a share of the profits. That is your general partnership, right? That would be us as Integrity Holdings Group. They do all the legwork, finding and vetting the property, creating the business plan, executing the business plan. Essentially, they do the work that you would be doing as an owner and landlord of a single-family rental or a duplex, but just on a massive scale. The limited partners are the passive investors, like you, who invest their money into that deal. The limited partners have no active responsibilities in managing the asset, okay? A real estate syndication can only work when general partners and limited partners come together. The general partners find a great deal. We put it together, put an efficient team to execute on the intended business plan, and then the limited partners invest their personal capital into a deal or a fund that invests into those deals, and they fund the properties and they fund the renovations. So together, the GPs and the LPs will form an entity, usually an LLC, that is a property, that owns the property rather. So you have a property level LLC, that is the entity that holds the underlying asset. And this is where you get to own shares of that LLC, right? So you own shares of the LLC, or in a fund, this can be structured the same way. You own shares of that LLC, and that is a pass-through entity, and this is how you have the tax benefits of direct ownership. So once the deal closes, the GPs work closely with property management teams to improve the property according to the business plan. During this time, the limited partner investors receive regular and ongoing cash flow distribution checks, right? It's usually monthly or quarterly, however your deal is set up. And then once all the planned renovations are complete, general partners will sell the property in 3 to 5 years, return the limited partners' capital, and a portion of those profits. That's it. So why should you invest in a syndication? Well, now that you have an understanding of how they work, let's talk about why and what's in it for you. There are a number of reasons that passive investors decide to invest in real estate syndications. Here's a few of the top ones. You want to invest in real estate, but you don't have the time or the interest of being a landlord. You want to invest in physical assets as opposed to paper assets like stocks and bonds. You want to invest in something tangible and is more stable than the stock market. You want tax benefits that come with real estate investing. You want regular cash flow distribution checks, right? My mutual fund doesn't send me checks every month. You want to invest with your retirement funds into an asset like this. You want your money to make a difference in local communities. So a real estate syndication is nearly perfect in that a busy professional can invest in large-scale physical real assets without the commitment of time or excessive mental energy, while also producing a positive impact in the community and earning interest and tax benefits. On top of that, if you invest with us, right, you're investing with purpose, meaning that a portion of all of these proceeds from all of these communities that we're changing also go to nonprofits to benefit people around the world. So it's starting to sound better and better, right? Let's do an example real quick. So, is it real? How do we do this? All right, so let's take Jane and John, right? They're working together to find an apartment community in Dallas, Texas. Jane lives in Dallas. She works with real estate brokers in the area. They find a great property that meets their criteria. If they're looking at a bunch of properties, they find one listed at $10 million. John takes the lead in the underwriting. He's analyzing all the numbers, making sure that the income and the expenses are exactly where they should be, or where there is a place to move those numbers so that you can make it a better deal over time and make sure that the deal will be profitable. And then they determine that this deal is a good one for them, right? Jane and John don't have enough money to purchase a $10 million building themselves, so they decide to put together a real estate syndication. That syndication, they create the business plan, they create the investment summary so that they can send it to prospective investors and work with a syndication attorney to structure the project. Then they start inviting in limited partner investors who want to invest money into each deal. Each investor invests a minimum of $50,000 until they cover the down payment and cost of the renovations. Once the deal closes, Jane works closely with the property management team to improve the property and get the renovations done on budget and on schedule. During this time, Jane and John send out monthly updates. They're sending out cash flow distribution checks. And when the renovations are complete, John and Jane determine that it's a good time to sell after 3 or 5 years, and the property goes for $15 million. Each investor receives their original capital back, plus proceeds based on whatever the split is based on that deal. So at this point, each passive investor has received monthly cash flow checks during the renovation and hold period, plus their initial capital back, plus an additional profit margin at the sale, right? So it's a pretty sweet deal for the passive investor as well as the active investor. Now that you know the ins and outs of a real estate syndication, including what it is, how it works, how little effort you have to put in, how simple it can be to begin receiving your first passive income check, definitely don't wait 10 years to make this move, right? We've always recommended that you do your research, get comfortable with the sponsors, with the people that are operating, don't put all your eggs invested in one basket, and that you're armed with the knowledge about real estate syndications enough, right? If you do that, you're miles ahead at other investors. So tune in next week for part 2 of what is this real estate syndication, where we dive into the rest of the topics that are helpful in getting involved in your first deal. Thanks for listening.
Thanks for listening to the Free from Wall Street podcast. If you like what you hear, leave us a rating and review and let us know what you think.